Alvin, welcome back to another show. This is That Mortgage Show. I'm Adam.
I'll be out.
A couple of loan officers here to report you some information that we think is pertinent to the real estate market, the mortgage market, whether you're a home buyer, a real estate agent, or a mortgage loan officer. We hope that you stick around, hear what we have to say about some of the stuff that's going on in the economy, in the business, and hopefully you get a couple nuggets out of it, and we'll help you with your decision making.
Yeah. I think like and subscribe. Let's not forget to like and subscribe.
Yes, very important that people like and subscribe.
Yeah, we'll buckle you in. We'll take you for a little ride. Learn some things. We'll have some laughs. We'll have a good time. We're going to look back on it with a smile.
Yeah, we will look back fondly on the next 20 minutes. So
we're making memories.
A lot going on recently. We had labor market data, including the updated unemployment rate. Federal Reserve officials spoke this week. We had some global issues, a holiday, and just about everything seems to affect the real estate and mortgage world these days. So we're going to dive into quite a bit of it.
Yeah. Love that. A lot of things happening. Pumped about it. See what we got.
Alvin, and our favorite thing to talk about, or maybe the last couple of years.
Not our favorite thing to talk about. It's everybody else's favorite thing to talk about, and that's all they want to know. It's what's my rate? What's my rate? What are the rates?
Right. Yes. So we're going to take a quick look at mortgage rates. So rates have been extremely volatile the last month. They've been jumping between 7.25, 6.875. Just bouncing back and forth. Over 7, under 7. Depending on what time of day you look or what day of the week it is, you might be looking at a rate over 7 or under 7. But rates are currently trending in the right direction, which is down. The average 30-year fixed mortgage rate dropped 17 basis points last week, making the biggest weekly dip since August, and the rates have hit their lowest point since mid-October.
Yeah. So we just need to string a couple of those weeks together. 17 basis points last week. Let's string a couple of these weeks together. Let's get these bad boys down, right? Let's get that, let's get that rate down in the mid 6s, maybe low 6s. Next thing you know, we're high 5.
That's exactly right. So we're going to take a quick peek at Mortgage News Daily. They report on quite a few things in the mortgage world, but we're going to talk mortgage-backed securities. Mortgage-backed securities are it's a pool of mortgages. Any investment, you can buy mortgage-backed securities. So what you do, investors buy these things, and they're buying into a big conglomeration of mortgages. And as folks make their payments, these investors get their return on investment. As the price of the mortgage-backed securities rises and falls, so do mortgage rates. Mortgage News Daily has a nice little tool here. The Friday rate trend. Green's good, red's bad. Earlier this morning, we were in the positive. It's getting kind of the minimal. We'll watch it as the day goes on, but some of the data that came out this week, which we'll get into, indicates that we're going to see slightly better interest rates over the coming weeks. So keep your fingers crossed. Alvin, what are we seeing here? You want to talk about the actual rates that we've seen?
Yeah, let's take a peek. Let's take a peek under the hood, shall we? So conventional, you're looking at conventional rate there at the top. 30-year fixed, just under 7% at 6.84. Okay, so not too shabby, better than where we've been. And then if we take a peek at the bottom and the that list there, the government loans, govies, if you will, FHA and VA, just over 6%. 6.19 for FHA, 6.2 for VA. So get yourself into a nice government loan, FHA loan. Buy that thing very easily down into the high 5s, 5.875, 5.99. Give you something nice to talk about at your next holiday party. How you locked into a rate in the 5s. Unheard of.
Yeah, I locked an FHA. I locked an FHA at 5 on Tuesday. 5.99. 5.99. So yeah, it definitely feels good, and we can definitely get you down in there, and it's making FHA quite attractive, even if you are someone who's qualifying for a conventional loan. So definitely take.
It could actually be a savings there, right? Everybody wants to go conventional because I guess they just assume that that's the way that you're supposed to go, but not necessarily the case. Different strokes for different folks.
Well said, Alvin. just another reason to pick up the phone and call us if you have questions.
Give us a call. Just give us a call.
So, moving on from mortgage rates, let's get into some things that I think are affecting mortgage rates and it's important to pay attention to. So that's the labor market. Labor market is being heavily observed by the Federal Reserve. The Federal Reserve is going to make decisions on whether they're going to raise or lower rates, and this is the data that's helping them make that decision. So that's why we're sharing it with you. If you're thinking, oh, I don't care about this stuff, well, I don't know. Maybe take a look. Maybe you're taking a peek behind the curtain here.
You really are.
You know?
Get a look at how the sausage is made.
Exactly. Right. Exactly. So we'll get into some of the reports that came out this week. But to sum it up, the labor market data that was released December 4th through 6th indicates a modest cooling labor market, which seems to be pushing rates down and locking in a Federal Reserve December rate cut.
Mm-hmm. We're just going to keep these bad boys crossed right here. All things pointing positive, though. All things pointing looking like that's going to happen. Ab, tell us why.
So, ADP National Employment Report came out December 4th. This was the first round of jobs reports this week. This report measures new job ads in the private sector only. And the report showed that there were 146,000 jobs added in November. This was below expectations and down from October's ADP number. Less jobs than anticipated equals cooling labor market.
Equals positivity for interest rates, right?
Yes. So the next report, December 5th, was the weekly jobless claims. This comes out every week. We've talked about it before on the show. But initial jobless claims are those people who are filing for unemployment for the first time. All right. The initial unemployment claim rose this week by 9,000. It was more claims than anticipated. So more people than expected are filing for unemployment. Continuing claims, those people who are filing for the second consecutive week or more, fell. So little the polar opposite of the initial claims. Initial claims going up, continuing claims going down. So that's an improvement, and hopefully those people are getting back to work.
Yeah, those folks that have been on unemployment for a little while, finally getting back out there in the labor market. And that's what you want to see.
Today, just to wrap up the labor market, today we had non-farm payrolls report.
Stop it. Tell us more.
The non-farm payroll report is the same. It's measuring the same thing as the ADP report, but the non-farm payroll is public and private, where the ADP is just private sector. So, I want to show the headline for this one because it's just seems like they're grasping at some tantalizing verbiage here. So the U.S. economy adds 227,000 jobs in November as labor market rebounds. And I was reading some other headlines on this as well, and they refer to it as a surge, rebound and a surge. So why are they saying this? Well, if you remember in October, this report, there were 36,000 jobs added, which was
unheard of,
jaw-droppingly low. So sure, 227 jobs added in November is much better than 36,000, but to say that it's like a surge or a rebound, I think is like a little misleading. I think this number is more back on pace. Whereas last month was like there were some big like Boeing. There was like a Boeing strike, and there were hurricanes, and so I think it was like an anomaly.
When I hear you come out of the gates with tantalizing verbiage, I know that you're about to dig into something pretty heavy, right? I know you're about to take a bite out of something. It's funny how they spin it. 36,000 to 227,000, just getting back to normal, not necessarily a surge because 36,000 was so ridiculously low. But it goes back to what we've talked about previously, where they have to fix the numbers from the past, and they're a couple thousand off in terms of the jobs report. And when they do the revisions, it doesn't look quite as good as they said that it looked. So it's all on how it's all smoke and mirrors.
It does seem that way. It really does seem that way. But And then the unemployment rate came out as well. Unemployment rate was 4.2%, which is like kind of where it was in like June, July. But I mean, I don't really know how much it jumps from 4.1 to 4.2. I get that's going in the wrong direction. I guess, but I mean, very small increments. I don't think that is worrying anybody.
No, I don't think so either.
And just to get back to the Federal Reserve and keep this train rolling, so the Federal Reserve are the folks that are looking at that data, and the Federal Reserve meets again this month, December, to decide on whether they're going to continue lowering rates, stop, or flip the switch and raise them. So last week, the likelihood of a December rate cut was almost off the table, but after this week's labor market data and some comments from some officials, it's now starting to seem like the December rate cut is like a foregone conclusion. They're claiming like 90% likelihood. Some people are saying even higher likelihood.
Yeah. And you start to see it pick up some traction. And that just kind of gives you a little bit of insight into how quickly things change in this industry, right? Because obviously all of that is going to impact what we do, which is mortgage rates, right? So all these little things just a week can have an impact, or one report can change their mind on what they're going to do, as far as the Fed cutting rates or not.
Yeah. So get out of here, ads. So we've got Federal Reserve Governor. Al doesn't like titles, but I went with it anyway. Federal Reserve Governor. Christopher Waller, who we've talked about on the show before. He put out he put out a statement or a paper this week, and it was titled "Cut or Skip." So it's all about whether or not. What the fuck is that, Al?
I don't know. I don't know what you're searching for, buddy, but we need to have a conversation. We need to have a conversation, and plus your freakish toys here are getting free airtime on our show.
I don't know what that was. I don't know if it was like a fucking sex toy. What the fuck was that? Was it like a face? Like did it change? Like it was like a laser?
Yeah, I think that's what it was. I think that's what it was.
All right. Anyway, Jesus, I'm gonna have to like edit that. But where were we?
Cut or skip.
So here we have Federal Chairs Governor Chris Waller, and you say it right in the headline. He's inclined to cut rates in December. I pulled a couple quotes from the Cut or Skip article that he wrote. Mm-hmm. So I'll just I'll just read those. So, quote, "I expect rate cuts to continue over the next year until we approach a more neutral setting of the policy rate," and end quote. And then second quote is, "At the present, I lean towards supporting a cut to the policy rate at our December meeting."
Mm-hmm.
So pretty blatant, right? Pretty blatant.
Now, tell us more. Really excited about this next piece. Sneaky sons of guns.
So the next person that spoke was the man himself, freaking Jerome Powell.
Romy.
There's word that Jerome Powell is going to play himself in a movie about himself. But anyway, Jerome Powell spoke to the New York Times on the 4th, 2 days ago. He was back to his cryptic ways, Alvin, saying recent signs of economic strength give them the ability to be more cautious when cutting rates. Powell brought up, again, a soft landing, which he completely just seems obsessed with, this soft landing. For the love of God, forget the landing and just give us lower rates.
Just give us lower rates. Just do it. I'm so tired of the flim. He's a flim-flammer. He's back and forth. You never know what's coming with this guy. He indicates they're going to cut, but then he's like, soft land. He loves throwing out soft landing to throw you off track. Like, you think you know what he's talking about. He's definitely going to cut. And then he hits you with soft landing. And you're like,
Yeah, I don't know how. He's very coy. But Powell was also asked about Trump's criticism. And in response, Powell said, we're supposed to achieve maximum employment and price stability for the benefit of all Americans and keep out of politics. Which, you know, if I didn't know any better, I would say, keep out of politics. That sounds good. But, it's, you know what? I'm just going to come out and say it. I don't buy it. I don't buy it. You call yourself the Federal Reserve. You're hand in hand with politics, buddy.
Hand in hand with politics. Bunch of thieves. Which brings us back to the podcast that we're going to do about the inception of
the Federal Reserve.
The Federal Reserve. Yeah.
Yeah.
So,
which I really can't wait for. And we'll get into that. But yeah, it'll tie it all together as to why we're like critical and calling them flamboyant thieves. Which
they are thieves.
Just to wrap this up. It seems to me that the Federal Reserve is an arm of the corporate industrial complex, banking complex, big government complex, and it looks like at times that they speak in code to their buddies so they can make the right decision to make money, whether rates are going up or down or left or right or whatever.
Yeah. Which makes sense as to why we feel so put off by it, right? While we don't really know what's going on, they're not talking to us. They don't really care how we interpret what they're saying. They have a specific audience that they're talking to. And sure as shit isn't you and me or Tom Homeowner, who we're trying to help and that we love.
Right. And but we're trying to get a live look and get like you said, under the hood. So that's why we're looking at the data that they're analyzing, and we're analyzing their response to it. So maybe we can get a beat on it, and maybe we can help people make some good decisions. Yeah. So we'll pivot out of the mortgage side and look at the real estate side. So National Association of Realtors, also referred to as NAR, put out a housing market update this year. The National Association of Realtors 2024 Housing Market Report. So we're going to break that down for you here, and it's a ton of information, so we're going to get through it for you.
Yeah, this report really breaks down who's crushing it in the real estate game and who's still paddling out, right? Let's dive in.
Let's do it. Let's dive in head first. What do you say? So first-time home buyers are they're getting shafted, it seems, by the housing market right now. They're making up only 32% of the market. It's down from 24%, and the first-time home buyer's age is jumped to 38 years old. So the average first-timer is 38.
That's insane to me. So the days of, you still see it, right? You just don't see it nearly as much. The folks that are in their 20s, right, that are buying their first house at like 25 years old. You're just not seeing it nearly as much. Life's too expensive. It's really crazy.
It is.
Hell of a shift.
According to the data, first-timers' average income is $97,000, while repeat buyers earned $114,000.
And it's still, first-time home buyer, $97,000 used to get you a lot.
Well, remember, they're 38 now. So
right. Yeah, it's a good point. So I would love to know what the, average 28-year-old, 26-year-old, 25-year-old is making right now. You know what I mean?
Yeah, I don't know. I couldn't speak on it.
Tough for home, for first-timers, high home prices, mortgage rates, inventory shortage, the whole lot of it.
Yes. And here's another one for you, Alvin. The median age of home buyers hit a record 56 years old, and repeat buyers, even older, 61. Pickleball, anyone?
Apparently the new trend is buy a house, put doilies on the couches, Werther's Originals in a glass bowl, and settle into some Matlock reruns, right? Might as well start bundling mortgages with a hip replacement.
Yeah. Oh, my God. What is a doily?
I only know this because Christine's grandmother had them on all of her couches.
Yeah.
They're like on the end of the couches, on the arm of the couches. It's like a little white circle thing that they would lay. It's like it's kind of like lace pattern. You know what I mean?
Yeah.
I don't know if they're all lace pattern, but they're just
like a pot, like something you put like a pot on.
Yeah, it's just like a little circle thing that they just put on the edge. I guess it's just decorative. It's really. If you saw it, you'd be like, an old person definitely lives here.
So, like, if it was an Italian, it would be like the plastic on the couch, like the plastic covering on the couch.
I was going to say plastic coverage on the couches, yeah. Nice and comfy when you sit down.
Mm-hmm. So back to the bombardment of statistics, Alvin. Love is in the air, my friend, because married couples made up 62% of buyers. And shout out to all my single ladies out there, because they made up 20% of buyers, stepping it up. But single bros, only 9%. So come on, boys. Got to get it together here, fellas. Do it for Trump.
Yeah, but those boss bitches out there buying houses, I don't need no man. I don't need no man, right?
Uh-oh, Al's head's moving.
Yeah, but, guys are out here, the single guys are out here chasing the girls, and the girls are out here chasing real estate. Yeah. So get your priorities in order, fellas. But you got to love seeing that the American dream is still very much alive, with married couples making up 62%. You know what I mean?
Love that. Bring back the nuclear family.
Nuclear family. Bring it back. You buy a house with your spouse, right? You pop out a couple of kids. You live the American dream. It's fantastic.
It's fantastic. And another, just to the point of family, multi-generational homes are getting popular too. 17% of buyers being children co-borrowing with their parents.
Mm-hmm. So don't really know if that's a kind of trend heading back to the old days when folks used to live with their, when the parents would move in with the kids when they bought their house, or if, parents are having to co-sign because their kids aren't making enough money or don't qualify for the house that they want to get, right? So.
Yeah, I'm not sure. Or it's just everybody's pulling together because everything's more expensive.
Right. Yeah, so that's something that it'd be interesting to take a dive into.
And here's one that I found reassuring if you're a real estate agent. Real estate agents are still doing their thing out there. A whopping 86% of buyers worked with an agent, and 88% of those buyers are ready to give their agent a 5-star review, according to NAR.
I'll tell you what, and I would give every agent a 6-star review if I could, out of 5. Because I love
6 out of 5.
Single one of them.
Every
single one of them.
We love agents.
Love them.
I don't really know what else to say besides just how emphatic I am for my love for agents. They're the top of the list.
The knowledge, the people skills.
The
craftsmanship. The way that they care about us as much as we care about them.
Yeah, the reciprocation of love is just abundant. Yes.
It really is. But people thought, honestly, though, people thought that NAR would kind of drive people away from realtors, but not the case, obviously.
The NAR settlement.
The NAR settlement, right, would drive people away from using a realtor. Borrowers or buyers having to pay real estate commissions instead of the seller paying it, but not the case. Still using agents, which is great.
The median down payment was 18%. First timers scraped together 9% on average. Repeat buyers, though, they're flexing on everybody with 23% down on average, and a record 7% of first timers used inheritances. So thanks for the mattress money, Gramps. Super chill of you to help out. Super chill.
Yeah.
Cash.
Good for the folks that got the inheritance money. Kind of crazy. 9% first time home buyers. You would think it'd be closer to like 3.5%, right? Or maybe 5%. Kind of average out the people that are putting more down and putting less down. But hats off to those folks.
Well, I would dare to say that the reason that number isn't 3 or 5 is because it's getting pulled up by the 7% of first timers that got inheritance from family.
And the fact that these first-time home buyers are 38 years old and have had more time to save up money, right? So I would think that the folks that are a little bit younger are probably putting less down. And the folks that are older, I mean, repeat buyers, 23%, they sold their first house, made a fortune. You know what I mean? So.
And the last stat, which I think is the most gnarly of all NAR stats, is that cash buyers made up 26% of all sales were cash buyers. 26%. Imagine rolling into escrow with your board wax and a fat stack of Benjis, closing on your home with a bag of cheddar, Scrooge McDuck style. Righteous, dude. Righteous. Gnarly.
It is gnarly. That is
totally
really leaning into the NAR. Really leaning into the NAR.
Shredding the NAR, Al.
You're shredding the shit out of NAR.
The housing market is truly evolving, my friends. Buyers are older, making more money. They make more money. And there's a divide, a schism, if you will. Cash heavy repeat buyers are the cash heavy repeat buyers are dominating the market, while first timers are just trying to get in the game, would do whatever they can to get in.
Yeah, which is something that we've been talking about for a while. But family vibes are driving a lot of these decisions, right? So whether you're buying or selling, keep the vibes high and your real estate agent close. Very close. Give your real estate agent a hug. Give your real estate agent a hug. Give them two hugs for good measure.
Give your real estate agent. Give them a hug.
Give them a hug from you, and then give them another hug from us.
Right. Give them a kiss from us. Give them a bottle of wine from us. Give them tickets to Orioles game from us.
And give them our business card, too.
Yes.
Give them the link to our show.
Get on your knees and tell me you love me.
Leave it on the doorstep and get the hell out of here.
Yeah. 1, 2, 10.
Yeah. So, gnarly.
That's the show. That's our gnarly show. That's the show, man. It's a good show. You know what? I think it's about that time, Alvin.
Yeah, y'all best be getting now.
Well, best be getting on out of here. I think we drug on this show just a bit too long. Y'all come back now, yeah?
Y'all come back now. I think we got our point across. I think we dropped some knowledge. We made some friends. We had some laughs.
Well, that's about it. That's about it for me. All right, I'm about out of here.
Y'all get the hell out of my house now.
Oh man. Now, if you think the accent that we're doing is Baton Rougean. Let's be clear that we are impersonating
Baton Rouge.
Baton Rouge, maybe down in Creole. Yep, Creole.
Creole, very Creole accent. That's our Creole. Thanks for clearing that up.
Just in case, I know the canceling people's kind of out right now, but
it's not going to go. Any more we talk, it's not going to go in a better direction. I guarantee you that.
Well, yeah, I think it's about that time. I got to get my prayers in.
Yeah, y'all best be getting now.
You have a blessed day.
Have a blessed day. Y'all take care now.
Thank you for watching. If you've made it this far, you are truly a warrior to get through this with Al and I. We hope that when the time comes and you have a mortgage need, you reach out.
You reach out. Give us a call. Shoot us a text. Hit it, message us on social media. And for the love of God, like and follow.
Like, follow, subscribe.
Subscribe.